Good afternoon. 1:47 p.m. Eastern Standard Time. I'm XRP Future Millionaire. As you know, I reside in the great state of Michigan. Hello, everybody. It's wet. My hair's a little wet now because it's raining outside, but I wanted to do this update. But we're going to start before we do this update because we all need to understand what's going on with the Fed hikes, with the recession that's coming, and the Fed can say whatever they want. Recession's going to happen. We're going to have at least a 50 basis point rate hike on this next Fed rate hike. And everybody needs to get on the same page. You guys have been doing a fantastic job hitting that like button, like, exceedingly well. Probably to the extent of 50% higher on the likes on the last few videos than I normally get. Even a couple of them approaching 200 likes. So I really appreciate that. It really makes me feel good. And I'm going to continue to put out this content like nobody else does. Cover the economy, cover crypto, cover commodities, cover bullion, and more, so much more. So that we can all stay on the same page. So make sure to hit that like button, sit back. This is a couple-minute video. Pay attention to it because we all need to understand what's coming.
Roger, we've talked about this before. The big problem, though, is that the Fed has to get inflation under control, but it's got these really crude tools. This is a supply issue, and the Fed doesn't have the tools to increase supply. It only can tamp down demand, and maybe in this case, it's going to take a lot more than tamping down to
And this is the former Fed VP, so he can speak a little more freely now that he's the former vice president, or the former VP for the Fed.
Really slow this problem of inflation. They may have to do some serious damage to the demand side of things in order to make any difference.
I think you put your finger on exactly the dilemma. I think a recession is at this stage, almost inevitable. Because they don't control supply. And we've seen how volatile supply can be with the shutdown in China. We also see uncertainty about oil prices up and down, et cetera. And so, as I've said earlier, it's a witch's brew. And the probability of a recession is, I think, unfortunately, very, very high because their tool is crude and all they can do is control aggregate demand. And by the way, some people are going to be harmed earlier than others. But, they have no choice. They've got to maintain credibility, which to date they've done reasonably well. And to be fair, I think they're going to end up validating the market expectation, of several 50 basis point moves. But, the probability of recession in 2023 is certainly very, very high because of the challenge of trying to get this roaring inflation under control and having so few tools to do it and so little ability to control the supply side of the economy.
You just said at the beginning of your comments that you think a recession is almost inevitable at this time. Is that the first time you've said this? And what are you talking about when you say a recession? Is this something where you're just talking about a couple of quarters of GDP declining? Or do you think that this is going to be something that is steep and painful and something we remember for some time to come? Well,
yes, this is the first time I've said it on this show. Many times I've said, the risk of inflation is rising. The risk of inflation is rising. I think it's now definitely over 50%. One of the things that has gotten me to that place is a recognition that the rest of the world is also slowing pretty dramatically. We saw that here with the net export numbers being, much weaker than had been expected. And so, we are seeing a global slowing here relatively rapidly, just when central banks in a number of jurisdictions, the U.S., the UK, are tightening. And so it is really a tricky global situation. The kind of recession hoping for, the sort of technical 2% of 2 quarters of negative GDP, that I think would be, a little bit of a win, frankly. It might be called a reverse soft landing, but time will tell because some of the dynamics are outside of the control of the Federal Reserve and are in the control of other central banks and other economies that have their own dynamics. We see China slowing a little bit as well. And so, it's going to be a very, very tricky tightrope through 2023. And I do fear a recession, and I'm hoping it will be a mild one.
Welcome back, everybody. 1:53 p.m. Mother's Second Choice on in the background, and if you don't have express written consent from Mother's Second Choice, do not copyright this music that I'm playing, because I have the express written consent from Mother's Second Choice, and you should too if you're going to take music. So I appreciate that, Mr. Anthony Carter, for allowing me this privilege to continue to play your music. And as you've seen from the Fed, and from former VP of the Fed, anticipating 250 basis point rate hikes in the next, one this month, one next month in succession. So I'm telling you guys right now, we're in some trouble here. Not just because of the current crypto market, but we're in trouble as a whole, because the markets aren't going to react kindly to this. And it's going to be a big, big problem. And you're going to start to see commodities and such start to take off again. It's just a matter of time. We've got some of them up 4 or 5%, which is a good sign. But it's not a good sign for crypto. And not just crypto, any risk asset. Anything that doesn't pay a dividend or doesn't have good earnings in the stock market. And crypto gets lumped in here. You don't make, there's no money coming in. You don't earn anything with this. You're not paying a dividend. So it's considered a risk asset. And people, when they start talking about risk assets, it's the first to sell off. And crypto's amongst the risk assets. And that's just the way it goes. I don't make the rules. If crypto did something else besides, here's the problem. If I buy crypto, I have to rely on some idiot to pay for more than I did if I bought it at a bad time. If I bought it at a good time, the people aren't idiots, because now you're selling it into a buying market. But if you buy it now and there's no buyers, you're praying to God somebody stupider than you were to buy it. And like right now, the market's unstable. And for these little 5 to 10% gains, it's not worth it. And with the capital gains tax at 35%, so if you make 10%, now it's only 6.5%. Then you got your in and out and all this other bullshit. There's fees on top of it. So there's a lot of stuff that goes on to it. So when you start to understand the tax code, because I got hit hard this year. I had over $10,000 in earnings that I got hit on capital gains. And every single one of them was a short-term capital gains hit, because I didn't keep anything over a year. Even my XRP I only had for a couple months when I finally sold it. And yeah, it hurt. So I understand how to trade. So these little moves right here don't mean anything to me. Now, if I seen this, and I'm like, okay, well now we hit a double bottom here maybe, or we come down a little bit, reconfirm this, and we double tap it like we did here, and then we want to pull up, and I think this W would make something, and we come up to $1, maybe even higher to $1.40. Well, yeah, and then I jump the fuck on, and I'll pay the capital gains tax. You know why? Because if it's at 57 cents and it comes up to $1, I'm making 75 fucking percent. And then, God forbid, it goes up to $1.40. I'm up like 150%. So, yeah, I'll take the capital gains hit on that. That's 150% or 75%. But on 5 or 10%, no. I learned my lesson last year. I made a lot of money on 5 and 10% trades. Lost a lot of money due to the capital gains. And it's only getting worse on next year's taxes. So, we all have to be honest with ourselves, guys. Why I do what I do here is I try to keep us all on the same page. No bullshit. And I'm not going to lie to you. So, we make a 2% trade. Who gives a fuck? Now we got to pay 35%. And at the end of the year, even if you're not taking it off the exchange and then you lose the money, you still have to pay for that capital gains hit. Unless you come out negative, then you can write it off as a loss. So, but I haven't had a loss in the stock market or crypto since I started trading, and that was like 3 years ago. In my first year I could write off 3,500 because that's the max you can write off. But actually that was like 5 years ago now in the stock market, or 4 years ago. But since then, I've been all positive, so I've always got hit. And I learned very hard, because I didn't think I was going to do as good as I did in crypto, because last year was my first year. But I took 3,500 and was up like 40 or 440%. And by the time I got hit with the capital gains, I was plus like 10,800 and something instead of my taxes, which sucked. It didn't suck that I was up that amount, but it's not like I have all that cash flow on me, because I put $8,000 worth of my profits into physical bullion, and mostly silver, some gold. So I knew what I was doing. It's just you still got to pay for it. So if you can learn anything from this update, the 5 and 10% bounces are nice, but unless you're going to have a substantial bounce, the capital gains hit you're going to take in the USA, it's a kick in the nuts. I'm just being honest with you. So trade smart, trade wisely, so you don't have to give the government back all your fucking money. And that's why when I buy, I like to be a long holder, because then I don't have to deal with the short-term buy-sell bullshit. And ideally, I would like to buy and not sell for a long time. So that's why I trade assets on Lobster, because I can find certain ones that I trust. And there's things coming on with the digital system to where I can buy them at the cheapest you can possibly be loaded up at a fraction of a penny. It's like 6 zeros and then a 1. And then I know that's the cheapest possible price. And then when I come online, I can do what I want to do. I've got one right now that started at 1 and it's up to 7. You know, 6 zeros and a 7 now. And that's 700% profit on a couple $100. And I've just been kind of recycling, repeat, and rinse and repeat. Because I want to buy as much XRP and XLM as I can. So, you know, while the traditional market is all fucked, I've been doing a little bit of, you know, smart trading, stacking, buying some things that I think are good. But like, this is what scares me. Look at Bitcoin. I mean, Bitcoin could very easily do this and when I say pour out, once we break this, actually right there, once that area is broke right here, you got a big ass drop, because that's an M topping reversal. Until it's not, it is. XRP future millionaire. Don't get caught up in all the bullshit.